Hey everyone, Tony here again. Wanted to recap today's events in the market. I've been kind of distracted today, so I didn't get much time to focus on actual trading and the charts and whatnot. So I'm trying to catch up now. So first off, let's see what's up with coronavirus, and we can see that we have nearly 93,000 cases now, 92,820. Unfortunately, 3,159 deaths and approximately 48,000 have recovered. So I would say a little over 60, what is it, 60%, give or take? I'm terrible at head math, so I apologize. For here, us in the US, it keeps going up. So we now have, I think as of yesterday's video, we had 100 or so. Today we have 127 confirmed deaths. I think that went up by one. It's a little confusing. So maybe one. I don't know. So anyway, 7 people confirmed dead. Terrible news. 8 people successfully recovered, but again, this may be highly inaccurate. And yeah, it's a little scary. So we had one in Sarasota, but now it says 0. So I don't know if maybe that means that they passed away, or actually, no, wait, coronavirus deaths by state, 0 Sarasota. So not sure what happened there. Maybe they're infected, but not, yeah, infected, but not dead. Hopefully that remains and they can go over to the fully recovered. But yeah, I mean, it's all over the place now. Apparently it's all 4 corners basically, and really the only thing that's going to happen is going to spread. It just sucks, but that's what it is. So Boston, Massachusetts, we got 1 corner. We got Florida, so the other corner. So we got the east there. We even got DC, I believe, is in here. So quite literally like the East Coast. And then pretty much all West Coast. So it's just, unfortunately, just a matter of time before it spreads to more and more places. Hopefully I'm wrong, and hopefully it gets fixed as soon as possible. But yeah, it's not looking too hot there. Although there was some sort of good news. I think there was a gentleman that should have done some more research on him, but basically saying that it was the equivalent to just a severe influenza, which is the flu. And hopefully it really is that way and not anything worse than that. But I guess time will tell. So let's get out of this coronavirus part and then go to the next one, which is really interesting. So the Fed had a emergency meeting and they ended up cutting, I believe it was half a point. I think it says it here somewhere. In the statement, the Fed said it cut its Fed target by half percentage. Yeah. So what does that mean? That means that the stock market should rally, right? But going to the charts here real quick, you can see that the last, let's see, it's going to be the hourly. So let me see, 3. So today's action was pretty much initially bullish, rally, then just dump pretty much midday forward. So what does that mean? So could be a couple of things. It could be that the market realizes that because the Fed cut the interest rates, they see how bad this is really going to be. And in anticipation to that, they used what is now this little bit of a rally, a dead cat bounce, whatever you want to call it, use that to their advantage to then dump what's left of their holdings to cash out, to liquidate. That's really my best guess because there's really no other point. So now it just doesn't vote well for much of the market. When you cut the rate, when the Fed cuts the rates, you see a rally. I mean, it's just the way it is. So when you see a dump, it's not good. So that means that there's fear that's going to persist in the market. my point of view, at least. Going to Finviz, you can see this little heat map here. It's all in the red. So yeah, it's looking pretty much like late last week, early this week. I mean, pretty much late last week. And the stocks that are up, again, are pharma, biotech. There was this oil and gas company. Pretty much mostly biotech companies, which, again, makes a lot of sense. So let's pretty much get into the charts again real quick. There's not much that has changed, really, except for the for that. I mean, we had a excuse me, we had a bit of a rally yesterday with the idea that the Fed was going to cut the rates. They cut the rates and the rates dropped, so that's kind of a little nerve-wracking there. So I don't want to. So I had done a forecast, which I hate doing forecasts, but this is what I would have been doing. So normally, if I see a pullback, so basically we see a nice run downtrend, and if it pulls back up to the 38.2, usually that retracement extension price target, from my experience, gives you a target anywhere between the 61.8 here and the 100%. So a price target, a short target of 2007.26 to 2005.18. So, and why I think there's confluence here is because this is an ABCD. So basically this extension here from this AB down to, so AB and then reflected to CD from, starting for that 38.2, which now we can actually adjust it because we had a peak up here. Yeah, so if we go from this peak, if you go from that that wick high, you would have a price target of approximately 2590, 2600, give or take. And if you go with the body high of that candle, then you're looking at exactly, almost exactly the 78.6 retracement of 2548, so 2550. So that gives us a target of approximately $50 between 2548, 2550, and 2600. Again, I don't want that to happen, but from my experience, it happens more often than not. So better be prepared from my point of view. Sorry if my microphone has been scraping on my shirt there. It's trying to fix that. Yeah, so I would say that a temporary worst case scenario target is, yeah, somewhere between that 2600 and 2550 range. And then that's where it would get in. I mean, hopefully it doesn't get to that point, but if it does get to that point, it'll be interesting because there should be some major support there. There's that trend line that has historically been support since, let me see how long. I believe it's since 2011. Yeah, since October 2011 has been historical support for the S&P, and it's possible that it goes down there. So that's where the real key is, in my point of view. If it does break down that bad, does it act as support? Now, if it breaks below that, then then that's not good, and then that's where it ultimately becomes bearish. Right now, in my honest opinion, if it maintains, if it holds where it's at right now, between the 38.2 and the 50% retracement, the fib levels, and it just consolidates here, and then that's really best case scenario there. I mean, I think that's what you want to see. Not best case scenario, but that's a good scenario. Best case scenario would be just continued rallies. But I think what everybody should be hoping for is consolidation here. I think that would be healthy. That would be good for the market. It would give it time to breathe. And you don't want to see a crash down. You don't want to see spikes up. It's fun. It makes it for if you're in the market in an upswing, then yeah, everybody's profiting. Everybody's having a good time. And unless you're shorting it, that's not fun. But it's an interesting time of the market. So we have to see what happens. There's no technical analysis that can really kind of guide you here. Well, it can guide you, but it's not going to be any kind of mild news is going to trump any technical analysis. So that's just the gist of it. So for the last couple of days, especially with this crazy candle, we broke below that 50, which we've done before. Recently, it's perked back up, so not too shabby. Stochastic is a little bit below the 50 line there. Yeah, the 50. And so right now I think we could be in a consolidation zone. We really have to see how we react to this week. This week is kind of key for me. Assuming no news too positive or too negative, you probably will I think you'll be seeing some consolidation, maybe leaning towards the upside. But again, any kind of news for coronavirus related being negative is going to shoot this all the way down, most likely to this level here, the 786. It would just make sense. But any good news, any news about a vaccine, any news that, hey, look, this is just a bad flu. It doesn't look that way, but if it turns out to be not as bad as people thought, the markets could rally and it could create new all-time highs in a blink of an eye, because that's just everybody's bullish. The rates are cut, and you have news that the vaccines are in or that coronavirus isn't that bad, and whoosh, new all-time highs, easy. But that's complete guess. So right now, I wouldn't suggest anybody take any major trades. I mean, if you want to scalp or do some basic tradings with controlling your risk, by all means, do so. But just be aware that it's a very inconsistent, very crazy time of the market right now. So just be aware of what you're doing, consult a financial advisor, and make sure you do your research before you pull the trigger. And that's basically it. I guess we can look at some other, everything's going to correlate at this point, so I can't tell how to spell right now. Apple, because I'm in futures. So if we look at Apple's actually up. We have, let me see here. So actually, Apple yesterday closed below the 20, above the 50 EMA, and now it's actually closed for today above the 20 EMA. So that's positive for Apple. Facebook. Just going to look at the FAANG charts, and so Facebook looking a little uglier from yesterday. So yesterday it barely found support at the 50 EMA, and today it broke down, tested the 78.6 on the fib, and is pretty much just dancing there. I'm looking at the weekly. Let me go back to the daily. Let me look back at Apple, actually. Sorry about that. So we are, pretty much the same. Let me go back to the, I just realized that I was looking at the weekly there. It's pretty much the same information. So let's go past Facebook now. So we have this huge, actually it was almost a full reversal there. Amazon. So Amazon closing kind of ugly there. So far everything's pretty much correlating, obviously, with S&P 500, especially these big guys. We opened up higher and closed down here. So the only other one that I want to see is Bitcoin. So let's look at BTC USD on Bitfinex. That has the oldest data. Let's see where we are there. So it's a downer day, but it's nothing too crazy. There's still consolidation there on Bitcoin. Still stochastic on the daily. We're still on the oversold region. Doesn't mean much as it's probably going to be pinned there for a little while, unless we have some major correction. Let me look at the weekly on this chart. So funny enough, we might see some further downside here. Yeah, we'll see. There's a lot of things that are kind of like lingering and pending on this news, and I think a lot of people are kind of like on standstill. So with that, I'm going to end today. I'm going to make it a little more brief because it's just trying to recover from the day's events. Not that it's been a crazy day, but I haven't focused as much as I wanted to on the market. So I will look at this later on, and I'll see if tomorrow I have a better analysis for you guys. Maybe fundamentally there's something that I can kind of pick on and hopefully give you some more valuable information there. But for now, that's basically it for me. If you have any questions, please let me know. If you haven't liked the video already, please like the video, subscribe if you haven't, and I will see you on the next one. Thank you.